What's up everyone, my name is Dmitry Invest, and after watching this video you will be able to improve your trading results using one of the most important analysis tools that I actively use in my trading strategy. Cumulative Volume Delta, or CVD, allows you to assess the market condition as it shows a real string of buyers and the sellers. Unlike a regular volume indicator, the delta specifically analyzes market buy and sell orders that push the price in one direction or another. Limit orders are not as valuable since the traders can cancel them anytime if they change their minds. Market orders are executed instantly, demonstrating aggressive stance of traders in one direction or another. If you still don't know how to trade on a future or don't know what difference between cross or isolated margin, I highly recommend you to watch my another YouTube video, so a link will be in the description. So what is actually a CVD? Like a volume delta has a different type of forms of visualization. I use the aggregated cumulative volume delta, so which looks like this. But what does it indicate? If the delta grows, it is a direct signal that there were more market buyer orders, meaning the buyer was stronger. The more aggressive the buyer, the more the delta grows. The same goes for sellers. If there were more market sell orders, the delta decreases. This convenient curving line combines a lot of market information, allowing us to understand the dynamics of traders' aggression. But what's the difference between basic indicators? You may have encountered other useful indicators with curved lines, such as MACD or RSI. The stock market, these indicators work more or less well, but in cryptocurrency, they often give false signals due to high volatility. Each such signal can lead to significant losses. For example, an asset can be overbought for a long time according to the RSI indicator, and this will be normal in crypto. Unlike the mentioned indicators, CVD doesn't have overbought or oversold zones. Therefore, when using this indicator, we must always conduct the analysis together with the asset's price. Without this, delta is useless. For example, this is what a healthy trend looks like when the price and the CVD move in the same direction. For example, if the price rises, CVD rises too. So if their asset's price decreases, CVD have to decrease as well. The delta dynamics change, showing sellers' aggression. Using this indicator, we can notice two very important phenomena in the market: absorption and exhaustion of aggression. These phenomena occur when there is a divergence between the price and the delta. So this can be a good signal of a new interesting opportunity, or a signal that probably is a time to close your position. Let's analyze an example. Type 1, exhaustion. In front of you, the price and the cumulative volume delta of the OGN coin. So we see that the price rose for some time along with the CVD, but then the buyer noticeably weakened. So this can be understood by the delta, which stopped growing and updating new highs, while the price can still continue its upward movement for some time. So this is a signal that market buyers pushing the price up have disappeared. Without them, there is a high probability that the trend will weaken and the price will go the other way. So we can use this information to close or previously open it long position or start a new short position. So everything, of course, depends on the market situation. It is very important not to forget that any indicator should be used in the combination with other indicators that I will discuss on my YouTube channel, so that's why I highly recommend you to subscribe. However, I can recommend using CVD in combination with the Open Interest. This indicator shows the real flow of new trader position, both long and short, so it can give us additional information and improve the quality of market signals. For example, the same chart and the situation, the price rises, but the CVD decreases. So this is a signal that there is a likelihood of a trend change because of aggressive buyers have disappeared. Open interests indicate that new positions were opened during this rise. So this could be traders who expected that the price to be continue rising according to the trend, but because they did not consider the trend exhaustion, they can easily fall into a trap. So next we see that the CVD starts to decrease sharply, and this means that sellers' aggression appears, which will push the price down. But we see open interest increased, possibly because some traders open its new short positions. Then open interest starts to decrease, meaning traders who open a position unsuccessfully will be forced to close them at a loss. As a result, we can see that the coin falls by 5% within a few hours, so this could have brought us a good profit when trading short position or saved our money from loss. So now let's analyze another example in a downtrend. The SATS coin decreases along with the CVD, but then we see divergence between the price and the delta. So the price updates lows while the cumulative volume delta does not. So this signals that the number of aggressive sellers in the market has sharply decreased. People are no longer willing to sell at such low prices. Here we see a large number of aggressive buyers appearing in the CVD who will push the price up. We open along and get a quick 10% growth. If the price continues to rise along with the CVD, it's a healthy trend that can continue until the buyers or sellers' aggression changes. Both examples, although in different direction, show one principle of determining trend exhaustion, noticing the divergence between the price and the delta. The second important market phenomenon is called absorption. Turbo coin, we see that the price started to decline along with the CVD. At some point, many aggressive buyers appear in the market, noticeably by the delta growth, but they cannot push the price up. The price highs are not updated. All the buyer's aggression is met by limit orders, likely from a major player trying to build up his short position on the bounce. The price is likely to continue going down. Understanding how absorption works in this situation, we could have a profit from a short position. Let's look at the second example of absorption. The Ponki coin we can see is in a downtrend. The price decreases along with the CVD, bounces a few days of growth, and then falls again along with the CVD. At some point, divergence occurs. Cumulative volume delta continue to decrease sharply and update lows, but the price, we can see that no longer falls much lower due to the absorption of seller aggression by limit buy orders. The price stops and doesn't fall below the level it initially approached. This confirms a strong level from which reversal and a good trend could occur. But where to enable these indicators? All this works on the CoinGlass website. Go here and now click Supercharts. Then in Indicators, enter Aggregated Futures Cumulative Volume Delta. Also, you can enter Aggregated Open Interest candles. Cumulative volume delta and open interests are usually used for short-term trades to be among the first to notice a trend reversal and enter the trade. Therefore, the 1, 3, 5 minutes time frames are most often used. Unlike basic indicators and analysis methods, CVD combined with the open interest gives us an advantage and significantly more information which can greatly improve your trading results. If you found this video useful, don't forget to like, comment, and of course subscribe to see my another YouTube videos to enhance your trading skills and results. Dimitri Invest. See you later.